you for joining Digi Tutorials today, and we are going to be talking, as promised, why do we need to know about taxes? So taxes will be the key subject matter today. So Canadian taxes, as we know it, they are mandatory. They're mandatory payments made to the government. They are not voluntary. So we don't choose whether or not we pay taxes. It's an obligation. These funds are collected and used by the government, and the government decides how they're being distributed. The programs and services that these funds are financing are education, healthcare, garbage and recycling collection, and so on. As we get further into the list, we will identify other programs and services that the government use these taxes to finance. So the types of government who collect these taxes are the federal government, and we also have the provincial or territorial government. That's for the different provinces, for example, Ontario, British Columbia, and so on. And then we have the municipal local government, whereby taxes are collected. And this could include like the cities, for example, those cities that are within the provincial government location. So it could be Brampton, Mississauga, that would be in the Peel region. And then you could have Toronto, which is in the York region. So what are the types of taxes paid? The types of taxes that are paid, one could be income taxes. Income taxes are paid by individuals and businesses. These taxes are paid on the income that these two groups are earning. Individuals primarily calculate the income of the tax owed on the income tax and benefit return that they do yearly. Businesses also pay taxes, but they pay taxes on the profit earned after deducting eligible expenses. And another time we'll go into what eligible expenses are, because not all expenses are eligible for businesses deductions. Again, we have individuals that are paying the taxes. These taxes are determined on the income and the tax credits that are claimed. So we know that tax credits that are provided by the government, some are refundable and some are non-refundable. Some are deductible and some are refundable. The federal and provincial or territorial tax are also calculated once the income tax is returned to the government. And once, say, whoever does those taxes, whether the accountant complete those taxes, they determine how much the income is, and then the income tax is calculated based on that. The tax credits, whether businesses or individuals, they are designed to help to reduce the taxes owed. And I touched on this earlier, that some are deductibles to reduce the taxes to pay to zero, and then some are refundable and paid to the taxpayer. For example, there's been a lot of questions regarding education credits. So if you go to school and you paid for education expenses, if you are not working after you've completed your courses, you cannot claim those expenses because those are deductibles to reduce the taxes paid to zero. Similarly, donations. If you don't have an income, you cannot get any reimbursement from the government with regards to or you can't get any reimbursement, or you can't have your taxes reduced, because if you don't pay taxes, it cannot be reduced to zero. So you have to have had paid taxes for that fiscal year or within that year that you worked, and then you will be able to reduce the taxes that you're paying. So a lot of people have those questions. because I have all these earnings. Yes, you did not pay taxes. If you did not pay taxes and you were self-employed, you still won't get back certain deductibles. So the deductibles must reduce the taxes you pay to zero. Now, refundable tax credits, those could be things like other taxes such as health, like medical expenses. Those are credits. Those are not reducing the amount that you paid. But we'll go over that in another session. Types of taxes paid. So we also have sales tax. And the sales tax, it could be defined as GST, which is paid on most goods and services purchased in Canada. This rate is 5%. So regardless of where you are in Canada, you will always pay 5% on this GST tax, which is goods and service tax. So when you purchase goods or services, most of the time you pay 5% on those goods or services. However, PST, it differs between provinces, and that's the provincial tax. So that's why it's provincial tax, because every province have their own calculation as to how much the tax is. So we don't have a rate here. In Ontario, it's 8%, and in other provinces, it could be different. HST, however, is a harmonized sales tax, and in Ontario, we just charge HST, which is the 8 plus 5, 8% PST, and 5% GST. And this combined tax is charged by some provinces. In Quebec, they have a different way of calculating these taxes, and in another session, we can talk about that. And other types of taxes that are paid could be the local government's calculation on taxes on the value of land and building. So most persons who own their properties, they will receive a bill from the city with regards to the amount of taxes that they will be paying, and it's based on the value of the land and building. So every province, every city, and this local government is usually the city, which is the municipal government. So you will pay taxes based on what the rate is in that city. Customs duties or tariffs, those are federal government charges on some imported goods and exported goods. And a lot of times you'll find that businesses have to pay these duties, or even individuals. If you're crossing the border or if you're shipping products overseas, most times you're being charged, even though you don't notice it, it's part of the cost that you're paying for the goods to be transported over the border from overseas to Canada. And if you're exporting goods as well, you pay. There are tariffs and custom duties on products and services, and it's just one of those things where each country has their own fees or charges based on the customs. Health services taxes, this is based on the provinces and territories. So each province has their own healthcare system, and they have to manage those healthcare systems. So some provinces and territories may charge additional amounts to access these services. So it depends on where you are located within Canada. And again, this is just a Canadian tax educational session. It has nothing to do with any other country outside of Canada. So if you're watching this, you will learn more about the Canadian taxes, but it does not pertain to anybody outside of Canada, unless you're a resident of Canada. Public programs and services, these taxes that you pay, they are supporting these services. And again, I did say that in the first session, or in the first slide, or maybe the second slide, where I talked about the different types of services that these taxes that is deducted from the government, whether it's through the businesses or individuals, the taxes that are collected are funding these services. So education and schools. So within your province, within your city, you're being charged for to help to facilitate the expenses for education and schools. Also healthcare and hospitals, roads and bridges and so on. You can see the list on the screen. So all of these programs or services are being funded by the taxes that are being deducted at source, or whether it's from the businesses who file their taxes to the government. So while it is crucial, which is why it is mandatory and it's an obligation, these taxes also help pay for families who are less fortunate and they have low incomes. It also helps students who are going to school and can't afford to pay for their tuition. We have certain loans that are called student loans. And so the government provide these loans to help, and even students who are applying for these loans, sometimes they don't pay back these loans because of their income situation. So, or the tax-paying dollars, they go towards these different programs, and the benefits are going towards the families, the students, adults 65 years and older, and persons who have disabilities. So again, this is why it is important to pay taxes, because the taxes are funding these programs. So employee taxes, they are critical in terms of when you get your pay stubs, you notice that you see the deductions. So it depends on where you are located. In Ontario, you're going to see EI and CPP. In Quebec, you're going to see QPP and QPIP. So these deductions are contributing to the social programs that I spoke about earlier, and even benefits towards the actual programs. And the programs, we will talk about that later on. But if you notice that the employment insurance, whenever you're not able to work, the same deductions that was made from your income, it doesn't necessarily go towards you specifically. It's not like you get the same amount that was deducted, but maybe because it goes into a pool, you're getting some benefits from it. So it's important that everybody is putting it in the pool, and when your time comes, when you need some help, you're getting that employment insurance, as well as the Canada Pension Plan. When you are over 65 years old, you're able to benefit from the pension that is distributed by the government. And it all depends on whether or not you contributed to it. That's why it's important to contribute. So when your time comes, when you need that help, you are able to gain that benefit. Employer taxes are required, and why it says employer, it doesn't mean that the employer is getting it from their own profit. It's coming from the source. So let me explain that. So the company is actually deducting the EI and the CPP directly from the employee's pay stubs. Then the employer also have to pay to match the EI and CPP. There's different calculation as to how much they pay, but they have to pay EI as well, and they have to pay CPP. And this EI and CPP is also going to each employee. So while you might think that your company isn't giving you anything, yes, they have to. While you're paying the EI and the CPP, they also have to pay EI and CPP on your behalf. So it's a double dipping, basically. So the government is actually getting two sets of money, one from the employer and one from the employee. So I hope that's clear. If you have any questions, please mention it in the chat and I will explain further. So if you're self-employed, unfortunately, you have to pay it twice. You have to pay both the employee and the employer contributions when the tax return is completed. So if your accountant complete the taxes and you have had some profit, you owe the government for the EI and the CPP contributions. And this is just to explain what it means to be self-employed. You are an individual who earn your own business income when you work directly with clients or customers. So it's not an employer working on your behalf and then you are employed by that employer, but you are the employer and the employee at the same time. So you are self-employed in that regard. So some social programs and benefits that these taxes are responsible for could be, for example, the GST and HST credit, which is not given to everyone. This GST or HST credit is given to individuals for every 3 months. So 4 times a year, which is every 3 months. And it helps those who are less fortunate and are receiving a very low income. The Canada Child Tax Benefit is a benefit that is helping eligible families with helping to raise their children. So if you have a child and they're 0 to 18 years old, or actually before they turn 18, so it's 0 to 17 years old. So just before their birthday, and I believe the year that they turn 18, the following year, you're not eligible for Canada Child Tax Benefit, which is also called CBB. And these are some of those credits that or benefits that are not taxable. So when you receive these funds in your account, you don't pay taxes on these because these are benefits. These are like just regular credits that are just tax-free. The employment insurance is similar, but in the case of this kind of benefit, it only benefits, as I explained before, if you benefits those who have been working. So if you were not working, you are not entitled to EI. So it benefits only those who are working. And for those who are working, they are able to get this employment insurance from the government. And it's a percentage of their income, original income. And in order to qualify, you had to be working and you cannot be fired. It has to be based on a no-fault situation. So if you were working and you were either let go because of maybe the company is downsizing or it's just not able to employ you anymore, like, to let you go in that regard. And I guess during COVID, we had a lot of that issue where people were downsizing, companies were letting people go temporarily and so on. So in that case, employee insurance was available for these individuals, but the government had stepped in and they had given CERB. And I guess it was kind of help out as well because so many companies would have had to pay out a large sum of money to their employees. So these benefits, you can only get it if you just had a baby and you need to go on parental leave, if you're sick, or if you have to give caregiving help to maybe a child or whoever it is, maybe someone that is depending on you, so maybe a dependent. So we also have these programs are available both within Ontario, and also residents of Quebec are able to get some of these programs too. But just so you know, the CPP is for everywhere else except Quebec. Old age security pension, this is just a pension that in addition to CPP, anybody who is over 65 is able to get this pension paid out to them. The retirement pension, you are able to receive this when you're 60 years old, but you would have had to make at least one valid contribution to that CPP. So if you did not make any contribution to the pool, you will not be able to get this benefit. Similar to the QPP, in this case, you have to have had contributed to that pool at least for 1 year. So if you were not contributing for 1 year, you are not eligible. So while CPP only requires that you contribute one contribution, maybe one deduction from your pay, the QPP requires that you contribute for 1 year, not less than a year. And it also, the Quebec plan also have additional payments if you need help for health and disability. So the social program also includes social assistance, and some people call it welfare. And this is made out to individuals who need help if they're running through a situation where they are destitute and they maybe even an emergency situation, they don't have a job, they lost their job. And this is not the same thing as EI. This person could also not have had a job or probably did not contribute to EI and so on. So if EI does not kick in, then this person will be able to receive social assistance. But the government will also make a determination as to whether that person is eligible or not. So it's not automatic. So basically, that's what it is in terms of how the government help within these social programs and benefits. But the only way the government can help with these services or benefits is when we as Canadians are paying our taxes. So this is just an overview of what Canadian taxes look like and what they are in terms of the in-depth itemization of each of them. What do they do with the money that they collect, and what happens when you get older, what happens when you're sick, what happens when you lose your job, and so on. So the good thing about this program or these programs is that Canada is basically distributing the funds that they collect back into a pool where our residents can be assisted. I hope this has helped with a little bit more understanding of what we do in terms of how Canada monitor and manage the taxes that they collect from their residents. Thank you. And if you have any questions, please feel free to share that in the chat. Have a wonderful night.